Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, welcome to the week that was, the weekly podcast that sums up market movements and events from the past week along with their implications on asset markets. I'm Michelle Castellino, your host for this week's episode. Today is the 15th of June and I will be sharing key market developments over the last week. Starting off with global macro updates. The US inflation data for May came in last week. The data was largely in line with expectations, with headline consumer inflation rising 4.2% year-on-year, the fastest pace in 3 years. This was driven by higher gas and airfare prices resulting from the Middle East conflict. On the other hand, core inflation eased slightly on a month-on-month basis. Conversely, the European Central Bank delivered its first rate hike since 2023, raising rates by 25 bips and revising its inflation forecast higher, citing energy cost pressures from Middle East tensions. US markets were volatile around the inflation data. Markets fell sharply on Wednesday after the data came in, with Nasdaq down 2%, before rebounding strongly on Thursday, with Nasdaq up 2.5% and the S&P 500 up about 1.75%, driven by President Trump's statement that the US will soon sign a peace deal with Iran. Now moving to India macros, inflation data came in on Friday. Consumer price inflation rose by 3.93% year-on-year in May, up from 3.48% in April 2026, mainly because food got more expensive, with food inflation climbing to 4.78%. Rural areas saw bigger price increases than cities, 4.25% versus 3.53%. Fuel prices went up for the first time in 4 years, pushing transportation costs higher too. The RBI now expects inflation to average around 5.1% for the coming year, given the ongoing tensions in the Middle East, so prices are likely to stay high in the near term. India's FY26 GDP numbers also came in. Growth surprised positively at 7.7% versus 7.1% in FY25, showing strong resilience despite global headwinds. The impact of the conflict was largely contained, with manufacturing impacted the hardest, slowing to 7.3% in Q4, while services and other sectors remained robust. Investment momentum remained strong, with gross fixed capital formation growth at 10.8% in Q4, while consumption stayed healthy but relatively stable. Coming to markets ended the week higher, with Nifty up around 1.1% for the week, despite a sharp midweek dip, as a powerful Friday rally reversed the earlier losses on hopes of a US-Iran peace deal. Friday alone saw a sharp rally. Sensex jumped over 2.3% and Nifty surged nearly 2%, staging a massive recovery after hopes of a US-Iran peace deal. Broader markets also inched higher, with both Nifty mid-cap and small-cap surging over 2% on Friday. On Monday, the markets again opened on a strong note, with Nifty opening above 23,900 as President Trump announced the US-Iran deal was set to be signed on the 19th of June. Last week's rally was largely led by banking, with Nifty Bank up over 4% for the week. Rate-sensitive sectors including realty, auto and banks continued the positive momentum on Monday. IT remained the laggard for the week amid AI disruption concerns. It was the only sector that failed to keep pace with the rally on Friday, rising just 0.21%. On commodities, crude oil reversed sharply, down around 6% for the week and ending Friday at around $87 per barrel. It continued to decline further on Monday, falling below $83 per barrel. The rupee staged its best single-day gain in weeks. The INR strengthened 64 paise to end Friday at 95.11 per USD, supported by the cooling crude prices. On Monday, it gained further to close at 94.7 per USD. That's all for this week's edition of The Week That Was. If you found this useful, don't forget to like, share, and subscribe. Thanks for tuning in and have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.